Good morning. This is Dylan Jovine with Behind the Markets. Happy Thursday. Today is Thursday, April 30th, the last day of the month. Today, I'd like to talk about something that I have not talked about, I don't think, on this channel, and that is prediction markets. Basically, Bloomberg News is out with an analysis of Polymarket, which my understanding is that it's the largest one. This is an issue that I've been studying closely from a distance, and I've gotten up a little bit close, but I've not touched prediction markets yet. I've debated it. Frankly, the truth is, I think it's not good for our country to allow people to bet on a bunch of things. For example, local elections. I could imagine someone betting on a local election and going to extraordinary lengths to make sure that they win the bet. And that really threatens our republic, which concerns me a lot. So anyway, what is Bloomberg's analysis of Polymarket? Surprise. A majority of the profits on Polymarket were made by a small group of automated bots, with everyone else losing $131 million in aggregate. Most traders on Polymarket, around 69%, lost money, while the top 1% captured 3/4 of the profits, according to this analysis. It's very, very interesting. Basically, what you have here are programmers, people who understand betting, who are programming bots to take advantage of people that don't know how to bet, basically. It's like the stock market that way. The stock market is a place where people who know what they're doing take money from people who don't know what they're doing. Or, as an old friend of mine used to say, the stock market's a place where impatient people take money from patient people. But what's interesting about this, and big difference between this and the stock market, remember something. In prediction markets, in the stock market, you buy something that goes down, you lose a percentage of your money. In prediction markets, you lose 100% of your money. So it's a binary choice. It's either going from here to there. Basically, it's interesting. Bloomberg's analysis found that since the beginning of 2025, the typical bot averaged 89 trades on each active trading day compared to 2.2 trades for non-bots or humans, with trades spread across a greater diversity of markets. So it's very, very interesting. Clearly, you have smart people who understand betting that are actually programming bots for volume, that are actually going in there and just taking advantage of the passions of the crowd that don't really understand how to handicap or statistical analysis. They don't have any framework for this. They're just rooting for the local team or something like that. They have professional gamblers. And a lot of this, by the way, a big chunk of this is being done. A lot of these profits were done in sports. So you get the sense that professional sports handicappers are programming bots to execute their strategy. And the University of Toronto, which contributes to this article, it's actually part of this Bloomberg analysis. Really, the researchers found that the profits in the system flowed mostly to so-called market makers who offer trade at any given price rather than just taking prices that are already available. So you got guys that understand this is exactly what we did on Wall Street. I was a market maker. I owned a market maker. We made 100 markets. Not the biggest, but certainly not the smallest. It was quite a long approval process for the National Association of Security Dealers to give us permission to make 100 markets. Very, very important thing. Very, very special thing. But here you have people programming bots to be market makers. And basically what market making means is that you're setting the bid, you're setting the price, you're setting the floor, and you're taking the action at that price. Whereas you go into a Polymarket and you're just a bettor and you're going to where the market is. What are the odds that this happens, that this team wins or loses, up or down? And you put your money down. It's already set. The market's already set. These guys are going in there, providing liquidity, making the market with their own capital. And it goes on to say that the market makers did particularly well on sports wagers, with the winnings on certain categories like weather distributed more evenly, they found. So basically, it's hard to predict the weather. A lot easier to predict sports. And I imagine that you're going to find out some kid or some group of MIT programmers, if they're not doing it themselves, then you probably have professional sports book guys, professional gamblers, onshore, offshore, maybe casinos, saying that this is just another extension of our business, gambling. Why don't we create bots that actually make markets in these things, since that's kind of what we do at a sports book. We make markets in different outcomes. So they're creating all these bots, running their own proprietary systems, and they're making markets. Does Trump invade Venezuela? They come in there immediately and they set a price, a bid, an opening bid, where they'll take action on that. And because they understand statistical analysis, specifically in sports, that's an easier one. Will Notre Dame win? Will Michigan win? Since they're able to basically do real deep statistical analysis, as all real professional bettors and gamblers do, they're really able to just basically, they're like shearing these sheep. It's really unbelievable. Warning to those of you who are playing on prediction markets, you are betting not against people, you're also betting against professional gamblers. And it tells you that it is better to make the market in something than it is to come to the party late, because you're probably not going to make money. According to this, wow, basically 1% of all the people captured 3/4 of the profits of the people that run the bots. 3/4 goes to the top 1%. And isn't that an interesting takeaway that we can apply to the stock market? Most people don't know what they're doing. So they just gamble. They bet on stocks like they're gambling. It's passion, or they hear a story, but they're not actually thinking about what they're doing with their capital. As a matter of fact, most people, spend more time thinking about what kind of car to buy, or to spend 30 grand on a car, than where to put $30,000 in the stock market. Anyway, not surprising that this would come out. Anyway, that's all I have for you today. Have a wonderful day. I will see you tomorrow.